Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Thursday, February 21st. Nice down day yesterday. Outside day reversal. S&P down 18.99. Gold down 43. Dow down 108. Nasdaq down 48. And the dollar up 53. Markets did not like the comments from the FOMC minutes. So in the last 2.5 hours or so, we had a nice little sell-off. Now, the markets were a little bit weak. They were kind of looking for some sort of direction from the FOMC minutes that were posted out at 2 o'clock. However, we did not get that. We did sell off a little bit in the morning, but it was very quiet, very benign. Markets didn't really did have any conviction to the downside until we had the FOMC minutes. And we had an outside day reversal, marked an outside day reversal. Now, as much as the selling occurred yesterday, and it was an impressive day, and it was actually very refreshing to see risk-correlated assets sell off for the first time, a decent time, a good distribution day since the beginning of the year, and that's pretty sad. However, I don't think that are we looking into a major big sell-off? We don't know, right? We don't know because of the fact this is only one day. One day does not make a trend. However, it's a good start. We have a big engulfing red candle. We took out about 2 to 3 days worth of gains. Now we're going to need to see the market follow through and take out yesterday's lows. What usually happens, and I'll show you in the charts, we usually get a 38 or a 50% retracement, and you want to see that if this market is really going to go higher and test the highs. We could get a weak bounce today and then fail tomorrow, and then really probably sell off for a good 2 weeks, hopefully 3 weeks, and looking probably down at about 3 or 4% correction, which would be still bullish. So keep that in mind. The longer term charts I looked at last night, I'm not going to show you today. We'll look at that on Monday. Weekly charts, monthly charts, there's nothing wrong with them. Daily charts, yes, a little damaging. Outside day reversal again, so we're going to need some follow through. Now, the thing is this: with the markets got spooked from the FOMC minutes that came out, and the risk-correlated assets and currency, commodity block currencies, have enjoyed a joyous run for the last 4 years. Now, what happens when the Fed's out of bullets? Well, that's going to be the next thing, and I think that eventually this is all going to unwind again, and we're going to get into another bearish technical pattern in the market itself. Now, if you're trading during the day, and we have a lot of people that do trade, day trade, we have swing traders, we have long-term investors that follow us. We're running a free chat room, and I encourage you guys to sign up if you are trading during the day. And a lot of people emails yesterday saying, how did you spot that sell-off? I looked at the fact that there's 3 things, right? There's actually several things. One being the transportation sector, one being the Russell. Then you have the Nasdaq, of course, the S&P, and then the Dow. The Russell and the transports were very weak going into yesterday morning. Also, we had copper. If you remember, I mentioned copper yesterday. Copper was a major turning point, and I was looking at copper, and I look at that on a regular basis. Intraday, copper sold off the previous day while we made highs. So we had market divergence via copper. Now, copper is an industrial metal, and as we all know, we call it Dr. Copper. It is also a leader. It leads the markets, right? So when China came out stating that, we're going to slow down our construction, yada, 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 what happens? Copper sells off. And why? If China's slowing down their construction, what's the reason behind it, right? So I do think that China will come into play as well down the road, and will really wake up everyone. Now, we had a nice day in the dollar. Let's talk about the dollar real quick. Why? Because the dollar is the only game in town now. As far as Forex is concerned, we had 3 safe haven currencies, right? We had the Swiss franc, now pegged to the euro, so you could eliminate that. And now we have the Japanese yen, where the Bank of Japan has intervened for the last several months. So now what do you have? The almighty buck. The dollar is king. Now, the dollar is inversely correlated for now, but I do think that when we get into a quicker recovery state in the U.S. economy, we are going to you'll see the dollar rally with U.S. equities. But for now, when you have that pop in the dollar, you're also going to get sell-off in commodities, which we had yesterday, major sell-off in gold, which I'm going to cover today, and equities. So that is what our recap is going to be for today. Just want to show you, let's take a look at today. We have initial jobless claims, and this is why it's important. You need to look at what your economic data is, because if you were long, getting long into FOMC minutes, that would just be insane, whether it be long and or short, because you have no idea which way it's going to go. I mentioned to a few traders yesterday, I said usually the first move is the wrong move, and sure enough, markets rallied and then sold off, and still sold off hard into the close, marking the lows. So that's something that just keep that in mind for next FOMC minutes. But as you can see here, we got CPI, big number, core CPI, existing home sales. We have a lot of information today. Okay. Also, I'm going to cover crude oil. Not today. I'm looking at gold, but I'm looking to sell crude oil as well. You can look at the XLE or the OIHs if you're looking for a play. Okay. Let's quick recap into the overnight session. Asia all deep in the red, and basically on the hawkish Fed minutes. Took a lot of profit taking, took a lot of wins out of the sale in the overnight session. We also have our commodity block currencies: Aussie dollar, New Zealand dollar, Canadian dollar. They're all lower as well. Risk off. So we're going to see if this. I'd like to see a bounce today, and then I'd like to see a failure, and then we can really start getting aggressive short for at least a few weeks. And again, the volatility is inviting. It's nice to see markets at least moving, other than just grinding higher for 6 weeks. And like I always say, keep your palates dry. Believe me, there'll be plenty of opportunity to make a lot of money. But if you're getting beat up on the way up, you're just going to back off, and you're going to say, I'm not going to short the market because it's going to rally again. And that's not what you want, right? You want to be nimble, you want to take profits, and you want to take your losses. It's part of the game. All right, guys, let's get into our econ data. Like I mentioned before, as you can see here, we have. As you can see here, we have major numbers coming out. CPI, very, very important, so we want to make sure that you pay attention to those numbers at 8:30. Okay, now let's take a look at the dollar, right? I mentioned we had two bearish patterns. Everybody sees it, so when the patterns are known to the public, usually doesn't happen. Sure enough, we broke back above it. Now, we take out this 81.50 on a closing basis and probably a back test, making a higher low. Then I think the dollar is going to rally. It's going to rally really hard, because what's happening to gold? Gold is coming off hard. All of the safe haven money is going to go right into bonds and the dollar. So let's keep an eye on that as well. Okay, so we have a nice big engulfing candle. We broke above the 200-day moving average. We have our ratio chart here starting to break the downtrend line. We are overbought, so maybe a pullback today, or maybe another push up, and then a slight pullback into the 200-day moving average, and then we would rally from there. Now, let's take a look at copper. And this was one of my telltale signs. This broke out of the symmetrical triangle. We do have a bull flag, as you can see here. Here's the flag pole, and here's the bull flag. We broke back into the channel, and I mentioned yesterday, watch this, guys. This does not look good. And if you recall on my video, I said we have market divergence here. Now, it's only one sector, right? We follow a lot of other things to kind of put it in, piecemeal this thing. But we had another engulfing candle. So copper looks ugly. I mean, ugly. And we do have our stochastics rolling over, but we are not oversold yet. So we can at least get to the 200-day, which would probably get us to the bottom of the trend line. Then we need to reevaluate it. But copper, ugly, 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 ugly. Okay, let's take a look at our new lows. Now, a lot of our indicators started to roll over. I'm not going to burden you with a bunch of indicators, but I want to show you the new lows. And I said, watch the new lows here above 60. Look what's happened. Now we're starting to really start to tick higher here. Now, again, guys, we can literally pull back a little bit. One day, again, does not make a trend. I don't want you to go out and short the market here. I want to wait for a weak bounce. If the bounce is weak, now remember, and how do you gauge that? By volume. If the bounce is weak, and we only recapture about 38% of this red engulfing candle, which I'll show you in a moment, then we could start looking to put on positions, and we could start shorting the market and short any rallies, and you could do it aggressively. Okay, so here we go. We have the new lows, as you can see here, above 60, looking much higher. So this is looking mighty good, telling us that profit taking is upon us. All right, so let's take a look at that bullish percent index. As you can see here, we're extremely overbought. This is not on a sell signal yet. That's why I'm not burning you with a bunch of indicators as of yet. But this looking right that we're going to break down lower. Futures are down about 4 handles right now, 4 or 5 handles. So it does look like we may get some follow through, but we'll just, let's not get too crazy. Let's not get too carried away. But it does look like that we might get some follow through. I'd like to see a bounce first. Anyway, let's cover gold. I'm getting a lot of calls on gold. What do you think? What do you think is the right time to buy? I think, and you know what? I'm going to do this. Let me go to a weekly chart first. All right. Weekly chart of gold. 1540 is really the line in the sand, if you will. Even say 1500, right? Break of 1540 and close. Look out below. This sector is going much lower. As you can see here, we've been right now the long-term picture. There really is no change. We have 2 weeks of really downside pressure. We're a little bit oversold. We're getting oversold here, but 1540 is going to need to hold. That's the line in the sand. If we break 1540 on a closing basis, then we will lose this long-term uptrend, and precious metals will be in a big hurting. So this is something that I'm going to be watching closely. For a trade, absolutely. If you there's no reason why you can't do it for a trade. You're doing well for the month. You want to risk a little bit of money. I'm not looking to pick bottoms and tops, but if the market does sell off today and gold is down, which I think gold is down about $10 today, if gold opens down and sells hard in the morning for first 15-20 minutes for a trade, yes, you could buy gold for a trade, and the low would be obviously the low of your initial buy-in of your candle. But again, the next 2 weeks going to be real critical for gold, silver, and the mining stocks. If they cannot find support here and we close below, this is going to get really ugly, and it's going to get ugly really fast. So I hate to say it for the gold bugs, but I love gold and I would love to buy it, but I'm not looking to buy it anywhere in this area here, okay? So that's gold. Let's take a look at the, I want to show you the daily picture of gold as well. And this is where, you'll tie this right in here. As you can see, this is where we need to be. We need to hold 1525. Bottom line, that's going to be critical for the markets. All right, let's go into our sector charts. Here's the GDX. Here's the miners. I would stay away from it. You can see major distribution here. When things get ugly, they get ugly really fast. Remember, one door, a lot of people buying gold. A lot of people have been buying gold, accumulating gold. If this really starts to break down hard, if you don't think that gold has bottomed, think again. You're going to see major distribution in GDX, because the miners usually start first, and when they look ugly, then the bullion looks really terrible. So there's GDX. Let's take a look at our spiders. Outside day reversal. We're back into this upper resistance area, which was support. Now back in resistance. I want to see the market probably bounce today 151. Let's call it even 152 and fail. If we can get back and back test this trend line, this middle trend line that we have in here, and back test that and fail, and then the next day we break down, then I think we have a long-term, meaning long-term, if you will, through 2 weeks, 4 weeks of selling rallies. Okay. Now, the longer-term investor, you might want to, obviously, if not, but you might want to buy some protection. Puts are still cheap. They're only again, 1 day doesn't make a trend, but we are looks like that we're starting some sort of a reversal. And as you can see, I mentioned, 1 day down, we took out 3 days worth of gains, and that can happen. We could take out a few good solid gains, a couple of good days, and then market really take them away in no time. 150, 150 in the spiders I mentioned, guys, for last week. Watch it and close. We broke below it. Now I'm going to see a back test and fail, and the next area is going to be 149.80, which coincides nicely with the 200 period moving average on the 60-minute spiders. Okay, S&P 500, as you can see here, my first downside target is going to be 1475. 1495 is going to be another support area, which could bounce. So that'll be probably the minor pivot low. And then we're going to look at our first main target of 1475. Okay, so we have our CCI indicator, actually curled up. So looks like to me that we need a little bit more work. So we're going to watch it. Let's keep a close eye on things, but it does look like that volatility is starting to pick up. Big bearish rising wedge on the 60-minute chart from the 2nd of January. And now, as you can see, look at our indicators. They're really starting to roll over. They're pointing lower, much lower. And I think that 1498, which coincides nicely with the 149.80 in the spiders, a break lower, I think the lights go out for a couple of weeks to the upside. Okay, take a look at our 30-minute chart. As you can see here, we popped up. We tried to pop up. We failed. We had sideways consolidation into FOMC minutes and then literally broke down for about 2.5 hours. And again, it's only 2.5 hours, so one day doesn't make a trend. A lot of people are excited, and sure, of course, am I. But again, one day does not make a trend. I'm keep stressing that. Don't just go out and short the market. Let's get a weak bounce. Let's get our confirmation that price is actually starting to roll over and moving lower, that we have a tradable top in place. Then we could start out and look in the short. Again, outside day reversal. Here's a Russell, real ugly day, guys. As you can see here, Russell took out 4 days, 4 solid days of gains and big distribution. And then look at this. We have plenty of room to run to the downside. And if you have a question stating that, oh, did I miss the sell-off? Absolutely not. We only begun if the market wants to participate to the downside. XLF, big bearish rising wedge. We need to break this low. That's going to coincide nicely with the 20-day moving average. Once we break that and the back test and fail, then I think we could start looking to short some of the banks. Some of the banks have just gone parabolic, actually literally insane to the upside. And they are due for a correction. So the banks is one area I'm going to be looking at as well. And diamonds, as you can see here, big day, broke down. We're at actually we're below the 20-day by a couple of pennies, but something to keep an eye on as well. That's the diamonds for you. Transportation sector, big pop up, outside day reversal. Took the large engulfing green candle right away. This is what we want to look at, and this is what we want to see. 20-day moving average, 104.35. That's going to be our first target. But I'd like to really get down below the 102.40. I've been saying this for a good month and a half here. 102.40 break, we're going to catch that 50-day moving average. And then, of course, down the road, gaps here. We have a big gap up. Maybe the gap will be filled. Gaps don't always tend to be filled, at least right away. And, of course, Apple down hard. I keep telling you guys, please, if you're looking for a long-term accumulation, stay away. It's not ready yet. Below 400 is where you start to accumulate the stock. This is just a trading stock right now, and it's sick. It's got some issues, as you can see. Lastly is the Qs. Outside day reversal, back into this trend channel here. Again, guys, not a lot of technical damage on the charts. However, we do have an outside day reversal, which now we need to see what the market does today. It needs to prove itself today that it wants to go lower, okay? Keep your pallets dry. Get ready, because we're going to have some volatility. We're going to make some money. Have a great day, everybody. We'll talk to you tomorrow.